Alright, welcome to our weekly update on the global property markets, where we discuss waves, impulsive waves and corrective waves around the world. Property bubbles are bursting all around us. Some have already deflated, while others are waiting for the next hurdle. Today we're crossing the pond to the US to check the housing market situation and potential troubles ahead. There are rumors suggesting that conditions in the land of the free are not as optimistic as they once were. So far we've discussed property market conditions in China, Hong Kong, New Zealand, Canada, mainland Europe, the UK and Ireland, all of which seem to be in the final stages of a multi-decade bubble. They are teetering on the edge, one or two significant events away from reaching their peak, especially as bond yields are poised to retract within weeks, though perhaps not as quickly as I initially anticipated. Unfortunately, central banks do not respond swiftly enough to changes in bond yields, despite shifts in bond valuations. While there is a correlation between interest rates and bond yields, we should not anticipate rapid rate adjustments, even as bond yields on 10-year US bonds approach the final wave, after which yields are expected to plummet dramatically. I had anticipated that this would have happened by now, but the invisible hand seems to be delaying it, extending the consecutive waves further down the road. As a result, I now believe the final fifth wave will stretch until the end of the year. This is how long we can expect to feel the impact of dropping valuations in the housing market. I don't believe central banks have much room to keep rates elevated for an extended period. Once bond yields start descending from their peak, banks will likely be compelled to reduce interest rates, as too many mortgage holders are slipping into mortgage-related stress. This trend is reflected in the US housing market, which has disappointed me with its lack of diversity. Whether it's the East Coast, West Coast, or the Central West, they all seem to be following the same pattern. There are no outliers that have either ended the cycle or been left behind. At least in Australia we have Perth, with its unique position in the cycle. Before we delve into the specifics, let's take a look at the long-term national chart. The cycle started in the 1920s, making it the longest one I've encountered so far. I'm curious whether there might be an even older housing cycle still in progress. The first wave concluded during the Roaring Twenties, followed by an approximately 8-year correction. Afterward, we launched into the third wave, which extended all the way until the end of the 1970s. Then, following a brief correction in the mid-1980s, we initiated the final fifth wave, comprised of smaller Wave 1, Wave 2, Wave 3, Wave 4, and the ultimate fifth wave that we're collectively enjoying, though not without its challenges. Please note that the current final wave mirrors the previous Wave 3, which is reminiscent of a straight line, a characteristic more typically associated with speculative markets like Bitcoin rather than real estate. This suggests that there was an ample supply of fuel available to sustain continuous price growth without significant interruption. To assess how individual markets are faring, we turn to local real estate services, where we can track month-by-month price fluctuations and identify peaks in the cycle. We have 10 cities listed alphabetically to go through. We begin with Atlanta. The chart presents the final stages of the cycle, overlooking the beginning of the fifth wave within the last fifth wave. It started in 2020 at the height of the pandemic, and slowly crept up until mid-2022, where it concluded Wave 3. After a short correction, it started the fifth wave at the beginning of 2023. Now it looks we have started the third wave, which is slowly building up. After a short correction, we should expect a huge spike up, corresponding with the third wave, another correction, and the final fifth wave up. That will conclude the entire 100-year cycle. Austin, Texas chart looks pretty similar. The third wave of the final fifth wave concluded in May 2022. 6 months later, it hit the bottom of Wave 4, and now has started the fifth wave and is undergoing a correction after the initial Wave 1. After the following 2-3 months, it should start the third wave up, which will take it toward the last peak and potentially break the last high of 680,000. Another correction and the final fifth wave up, which will reach the all-time high and conclude the cycle. Boston seems to be a tad more advanced on the timeline, with a distinct wave 1 of the final fifth wave behind. The third wave also concluded in June 2022. The bottom of wave 4 hit in December 22, followed by a new wave 1 of the final fifth wave. There is a chance it's going to bottom before other cities and move up first. It's worth observing Boston's price action in order to see where the rest of the country is going. Chicago peaked even earlier into the third wave, as it spiked in April 2022. After a slower decline, it bottomed in December 2022, as the rest of the country. Now we are in the middle of wave 2, after which we should expect a huge spike up, as the rest of the country. Dallas peaked into wave 3 in May 2022, and bottomed in January 2023. Again, it just concluded wave 1 and is undergoing a correction, which should last another couple of months, after which there is going to be a huge spike that may pierce through the 500,000 mark and continue on higher after a short correction. Detroit spiked in June 2022 and bottomed 6 months later, like the rest of the country. It looks like it's going up again, but that's just part of the correction. Expect some more drops ahead, followed by a significant jump higher into wave 3. Note a different price range. We are operating under $100,000. There is a chance the final with fifth wave is going to pierce through that level at the end of the cycle. It seems that Honolulu delayed its peak and finished the third wave in October 2022, and after only 3 months started a new wave up, which looks to be huge, already breaking previous record. Whether that's already a start of the third wave remains to be seen. This could be only an extension of the wave 1, but it's worth paying attention to the market, because the valuations may surprise everyone, as if it's the richest Americans intended to move there. The remaining wave 3 and wave 5 are going to be spectacular in this market. On the other hand, Houston, like the rest of the country, is going to slowly grind higher and in the near future break the 350,000 mark and head higher to finally conclude the cycle. Meanwhile, it looks we're going to have fireworks over in Kansas City, as it might be undergoing a spike in immigration. While it peaked in June 2022 and bottomed in December, like the rest of the country, we have already broken the last high, which may indicate some huge price gains in the coming months, right after the correction we are going through at the moment. It may easily go past the 300,000 mark by looking at the size of wave 1 within the final fifth wave. It's going to be spectacular. In order to run more accurate predictions with resistance levels, I would need to have access to the actual valuations. Please leave the link in the comments below if you have access to such data. Los Angeles looks more like Australian cities. Finally, I get to see familiar numbers like $1 million. Again, it has peaked in June 2022 and bottomed in December. Currently, it's going through the second wave, after which we should expect a huge spike up, potentially passing the 1.1 million level. Another correction and a final spike up that will conclude the cycle. The same applies to Las Vegas, except sales are at the 50% discount. It is probably going to pierce through the $450,000 mark. And again, Miami is going to be another winner, as inner migration is setting fireworks under the house valuation. The current wave 1 of the final fifth wave has already gone above the previous highs, which indicates we're going to have a huge spike in the third wave, exploding towards 700,000 and probably beyond, as we have 2 more waves to go up. On the other hand, New York is going to have much more humble spikes. Nevertheless, it's going to pierce through the last high reached in May 2022. We have a relatively deep correction, which means the third wave is upon us. Expect some huge gains as a result. We are going to move towards 900,000 mark and potentially higher for the final showdown. Over in Orlando, we are going through the second wave as well, which doesn't have much more room on the way down. We should expect wave 3 to start soon that will break the 400,000 mark and aim towards 450,000. Where it's going to pass it remains to be seen. Phoenix peaked sooner and bottomed later, which may indicate weaker growth due to migration. We're supposed to have a correction followed by wave 3 and wave 5 that could potentially break the $500,000 mark. Philadelphia is also getting into deeper and longer corrections, which means it may end up having lower highs. Currently, they're undergoing a second wave correction, after which there should be a spike aiming for 300,000 and beyond. Portland is going to face a similar pattern, with a few more weeks of drops followed by a third wave up. That will take it to $600,000 and higher. San Francisco is also getting hammered with longer and deeper drops. There's more wiggle room here, given the valuations hover around $1.4 million. After another smaller drop, we should see a significant spike up above 1.6 million and aiming towards 1.8 million. That would end the cycle. Seattle is another city with deeper and longer corrections, indicating that it's bleeding people out. Again, we should expect the bottom within the next few weeks, followed by a huge wave 3 that will take the price above 900,000, followed by a final wave that will finish the cycle. And last but not least is Washington DC, which is undergoing a correction like the rest of the country, but it might be a shallow one, followed by a big spike up, which should cross the 700,000 mark, and after another correction, jump up high again for the final showdown. What all these markets have in common? They have all the symptoms of a controlled market. They all follow the same pattern to the smallest wave, not to mention broader waves. And there is no outlier where I would say this market has a long way to go, as it's potentially in the middle of the larger cycle. Nor I couldn't find any city that would have finished the cycle like in Korea or Spain. They are being managed with one huge lever, and that is the availability of credit and the ability to make repayments through jobs. So while LA houses go for $1.2 million, over in Detroit, prices hover around 70,000 mark. But both of these markets have started second of the final fifth wave. So while we should expect huge spikes in near future, they are going to be relative, expressed in percentages. A 10% gain in LA is going to differ substantially from Detroit in absolute numbers. There will be a time in near future where credit markets will freeze again, drying up the only source of sugar that is driving up these markets. Without a fresh injection of currency into the system, these markets are going to implode, and immigration is not going to stop it. So all these cities, all these markets that are going up now, are going to start declining, as there will be no more buyers or banks willing to provide even greater amounts of currency or credit. It's a mathematical certainty. There will be no wave 6 or 8 up, just a slow grind into ABC formations. It's not going to happen as yet, as the Feds keep printing currency into existence, adding fuel to the fire. So you might be losing your job, but your house is going to go up in price, just like your stocks and bitcoins. It's another sign of the currency losing the touch with reality and turning into confetti. My guess is, if the wave 1 lasted for 2 quarters and the correction lasted another 2 quarters, as shown above, there is a high chance the remaining waves are going to last as long. Wave 3, based on the previous wave 3, lasted for 4 to 6 quarters. It means we have about 8 to 12 quarters left, which means this house of cards may start crumbling as soon as the end of 2025 and the beginning of 2026. And they all are going to go down together, as the past price action indicates. It means we should expect a black swan event that will stop the credit flow. Is it going to be a bank holiday and consecutive collapse of banks in Europe or the United States, or a war event that is going to engulf all Western economies? Because all Western housing markets seem to be peaking and entering the final fifth wave, or of the larger fifth wave, indicating they are at the very end of the cycle, waiting for a pin to burst the bubble. is going to be truly global and epic in magnitude. From then on, you won't see any more higher highs, only decades of a slow decline like in Japan and Italy. Luckily, in the USA, you don't have the full recourse policy where you can just walk off your house and leave the bag for the bank to hold. It's not the case in Australia or Europe, which makes owning a house a very risky endeavor, as you will be paying your mortgage till your death, as the name suggests. But that's another story. Let me know if I missed any interesting market that buckles the trend and plays out of tune in this game of musical chairs. Next time, I'm going to run a summary of all the housing markets around the world and what to expect in the long run. So if you like this content, please leave a thumbs up and subscribe to the channel. Meanwhile, stay calm and count waves.